possibly in other states.
Yeah, okay. Today we have information that 2 crore farmers have already been identified. Now, that's really war footing. How many days is it since the budget? 20 days? So, you know, that's genuinely war footing. If 2 crore all over the country, of course, not necessarily only Uttar Pradesh, but I can imagine Uttar Pradesh. So, do you think that, you know, this calculation that everyone is going with SP and BSP uniting, the BJP will be 40 seats down at least in Uttar Pradesh, is too much of an inductive leap?
So that's the whole arithmetic of alliance, that if you add SP, BSP votes together, then even with BJP sustaining vote share, the maths is skewed towards the alliance. But there's obviously debate around vote transfer. So all that debate is relevant, and on the ground we heard both sides of the story, specifically on votes transfer and all kinds of seat numbers which BJP can get in Uttar Pradesh. But having said all that, with different views, this scheme is a wild card. And that's the thing which we have been pointing to investors, that this is the thing which will track for the next 15 days to 30 days, that if this gets traction at a local level, this could be similar to what we saw in Uttar Pradesh ahead of the assembly elections, where suddenly the narrative changed at the last minute.
Okay, that's very interesting actually. Gautam, hi, good morning. So apart from this farm scheme, anything else that you spotted which could influence voting behavior over the next couple of months?
So locally there, obviously what we picked up, stray cattle seems to be a political issue, and we have heard both sides of the story. So that's something very interesting we picked up locally, specifically in rural India, where it's hurting the crop, etc. Now, again, that could possibly influence voting behavior. The other thing we picked up, while there is no, we didn't get the sense of a wave like in 14 for Mr. Modi, but clearly Mr. Modi is the fulcrum of all debates. So even if there is no wave, the debate amongst the voters there, journalists there, politicians there, is all about Modi versus the others. So that debate is definitely relevant and at the center, which theoretically could help Mr. Modi. But again, the alliance arithmetic is also very, very strong.
Okay. What are you telling your foreign investors? Are they worried that India's fisc is going for a toss in this competitive populism? Are you telling them this is only up to the elections and then good behavior will return? What's your message?
So from the fiscal perspective, our message from the budget time has been clear that what we have seen over the last 3 months of competitive populism is, one thing is clear, whether fiscal goes for a toss or not, we will see post-election after the new budget is presented, but at least the budget presented for FY20 by the current finance minister, our government, is definitely aggressive on the revenue assumptions. But one thing is clear, whichever government comes to power in June, the fiscal space left to drive sustainable economic activity through capex or infrastructure is just not there. Whether the fiscal deficit goes up, remains in control, but any government which comes in, given the pre-election promises of support to rural India, either through farm loan waiver, minimum income support scheme, 6,000 rupees scheme, whatever, there will not be any fiscal space left, at least for the first year, to drive any sustainable economic activity. So in that context, we should not expect a meaningful boost to broader economic activity for the first year. Yeah, pockets like rural India, etc., should still sustain and do well. So that will help in stock picking, but not for the broader macro.
Actually, that is the less appreciated point from the budget. People were just relieved that it is not a 4 lakh crore package, it's a 72,000 crore package. But what nobody paid attention is it is a recurring number year after year, because it's a commitment for income transfer. And therefore, there won't be much left for investment, for roads. So how does that skew your choice of stocks, Gautam?
So obviously the capex cycle, we have been cautious. We don't see visibility of private capex coming back, and this competitive populism over the last 3 months makes the visibility even less. So all the industrials, infrastructure, capex, cement names still remain underweight. The rural focused sectors and stocks, but selectively, they should continue to do well in any political formation we see. And then there are sector-specific drivers like the corporate banks. The NPL cycle should continue to play out favorably for them. IT services should do well because all these fiscal pressures, etc., or the macro pressures coming through will keep currency in play and positive for IT services. And then becomes much more stock-specific calls.
Okay, we'll come to the stock-specific calls in a bit. But apart from this farm scheme, what about the other campaigns that the government has been, going through with, whether it's the electrification of every home, the affordable housing campaign, also the direct benefit transfer scheme? How is all of that progressing in rural India?
So again, the awareness of a lot of these schemes is quite high, in the sense that both journalists, politicians, and on the ground people do know of the scheme. But again, depending on the person you speak to, there is mixed response. Like for example, the free gas connection. Some people and journalists were happy with it. Some highlighted that the first 1 or 2 were free, but after that, when they started paying up, then it created some negativity also. So it depends on who you want to speak to, but in general, a lot of these schemes has been reaching the poor, and there is awareness. Now, it's up for debate whether the Indian population or the poor population is willing to vote based on all these schemes or not. That we'll know soon. But it's reaching there for sure. The housing part, the gas part. The other interesting part which came out talking to both the Congress and BJP guys, that one of the most popular schemes from the government has been the Swachh Bharat scheme, which is not necessarily taking up too much money, but somehow has resonated well with the population.
Okay. So you saw visible appreciation and presence of electricity, of gas connections, and more importantly of toilets. Is that appreciated enough to swing the needle? Because we are seeing a spate of advertisements from the government, across channels. So is there appreciation for that? Will that be a vote catcher?
So I won't hazard a guess on that, because our data set and sample set is too narrow and too small to make a comment on that. And that also we got both sides of the story, the appreciation as well as some pushback, because even the voters have biases.
Okay. So how do you position yourself as a long-term investor ahead of the elections? You've talked about 4 scenarios: a BJP single-party majority, a BJP-led coalition, a Congress-led coalition, and a third-front coalition. Give us your expectations, if either of this pans out. What kind of extreme situation do you see from the market standpoint, and what would your base case be now?
So the markets are clearly anchored around the second scenario, which is BJP-led coalition. The only difference being 6 months back, the market's expectations were a stronger coalition. Now the anchoring is more around a weaker coalition, maybe around BJP at 200 odd seats, and then a weak coalition right now versus 220, 230 earlier for BJP. That's where the markets are anchored around. But in investor discussions, the probability of Mr. Modi not coming back through a coalition was near zero 6 months, 1 year back. Now there is some probability being assigned. Still a low probability, but still some probability being assigned. Having said that, if you look at the market multiples for at a broad Nifty level, that doesn't tell you that the markets are pricing in for a negative election outcome. So the starting point of the markets does make us worried, and our risk-reward framework still suggests absolute downside for markets from here. Obviously, if you have a more extreme negative scenario, then the markets can derate further and stay there for a while.
Okay. Well, that's interesting. Just a final question. What kind of lows do you think the Nifty can go to, and what kind of highs in 2019 itself?
So our base case for the Nifty is 10,000. So that's about 6-7% downside from here. That's a base case.
Okay.
The upside scenario is 11,300, 11,400. And the downside will be below 10,000 levels.
All right. Thank you very much, Gautam. Pleasure speaking with you. And if you make any more such political visits, do keep us posted. It's most interesting and perhaps will be the most discussed and watched trend from now to mid-May. Well, there will be, of course, other economic trends, and the key among them today is this pledges that have not been invoked, the loans against shares. Mutual fund investors have learnt over the past few months that many Indian promoters have relied heavily on pledging their shares and have raised money from their mutual fund schemes to support their core and non-core business activities, and the sharp fall in the prices of pledged shares has resulted in a huge problem for mutual funds and for NBFCs. We are going to discuss these and other credit problems with Somashikar Vemuri, the Senior Director at CRISIL Ratings, and Anant Narayan, the Professor at SP Jain Institute of Management and Research. In a minute, we are also going to be joined by Jayesh Mehta, the Managing Director and Country Treasurer at Bank of America. Well, before that, do we have what we chatted with Nilesh Shah of Kotak Bank? Okay, Nilesh Shah put up a strong defense yesterday when we were quizzing him on why loans against shares and the standstill agreements are not dangerous for mutual fund investors. Since he's the man in the hot seat, let's listen in to the defense that he put in, and then we are going ahead with this discussion.
Mutual fund industry has paid 1,30,000 crore in income category in a market where it is difficult to sell. Shouldn't you be giving credit to us for repaying 1,30,000 crore in a market which is illiquid?
Oh, come on,
I
Nilesh.
think we should get Paramvir Chakra for that.
Nilesh, that's not fair. Nilesh, it's your duty to repay the money when people ask you back.
So,
I don't think you can get
unfair?
a Paramvir Chakra simply for giving back money to investors, which is their money anyways.
Ma'am, there are banks which have to repay obligations, but they get refinanced from RBI. There are insurance companies which have implicit guarantee of Government of India behind them. Mutual fund industries does not have any guarantee. Yet, in a market which is illiquid, we are repaying thousands of investors, thousands of crore every day. So your own statement is having contradiction.
No, I don't think. No, Nilesh.
There are illiquid
No,
markets,
Nilesh.
we don't understand
Nilesh,
risk,
no.
we don't know how to manage. And
Nilesh.
then you are saying that, oh, but 1,30,000 crore, these people are paying.
No, Nilesh, that is not the point. The point I'm saying is that there was a writing on the wall. So is it not time for the mutual fund industry to take a good look at credit risk funds? Should they not be, I mean, can you continue to keep them as open-ended funds, which is, one day call money basically, and then it is lent to investors, we now understand, lent to instruments which they are not paying back. So is it a lesson to be learned that these should not be open-ended funds?
Lata, we have repaid every single investor till today on our credit risk fund. And this is evolution of market.
Yes.
Number one, let's forget mutual fund for a second. We are living in a country where dividend payout is more than IPO proceeds. Where do you think investors or entrepreneurs will get risk capital to build industry, to build businesses? Second, when we are talking about credit risk fund, it's a small percentage of other debt funds. There are other funds in which the portfolio is reasonably superior quality, where there is absolutely no concern in terms of credit risk. Most of the portfolio is AAA and AA. It is liquid, and we have been honoring payments even during the worst of the crisis, including September 2018. Number three, the Government of India itself, through its tax incentives, gives for a riskier fund like equity 12-month tax benefits. After 12 months, it gets converted into long-term capital gain. The short-term capital gain is also taxed at 15% for riskier assets, whereas for a debt fund, the lock-in period is 36 months, and your tax advantage starts after 36 months. So the government itself is incentivizing higher riskier assets.
No, I think now the argument is going out of the discussion that we are concentrating on. Basically.